Good morning, traders. It's Thursday, May 9th. Taking a look at the charts, looking at the SP 500 futures, the daily chart here on the right. It was kind of interesting. I looked at the Fibonacci extension based on the low that we had back in October of 2022, the high that we had last year, in June, July last year, and then the low here back over in November. Or October, whenever that was. Anyways, if we were to carry that forward, take a look at the Fibonacci extension, which if you've been following me for any time, then you know there is some pretty interesting information here, which is we have the rally up, we've got the pullback. Based on this momentum, it allows us to forecast, project forward where this momentum should carry us. And we know if we hit the 618 and have a pause or pullback, we almost always go up and hit the 100% measured move, which is what we've done. And now we've seen the market have a big hit. So that is going to be very interesting to see how this unfolds. So this big pattern has played out. Even in the precious metal space, their short-term charts have also played out to the level that we wanted to see them get hit. And now they're in a consolidation phase. So the next question is, are we going to start another leg up where this is a consolidation? We would start a new Fibonacci level from the low to the high, and then wherever this low is. For all we know, this could pull back further and then start another leg going higher. But the SP 500 has hit that 100% measured move, which is fairly interesting. And if we take a look at the NASDAQ, let's look at the NASDAQ. NASDAQ still has some room to go. I think I might have done this on the QQQ. Here's the QQQ, and I'll shrink this down. We had the initial rally up. We had the pullback, and then we've hit the 618, and more or less, it has potential to rally about another 7% from where we are. So we'll see how that goes. With that said, I generally don't look at anything other than the SP 500 in terms of the overall market trends. So when I'm looking at major trends, I don't look at the Russell. I don't look at any of those things in terms of what is the ocean tide doing. To me, the SP 500 is the ocean tide. If you can identify what's going on with the SP 500, then the rest of the equities markets are pretty good. So to me, the SP 500 has hit that level. So that definitely puts into question, what other indexes are doing. The NASDAQ shows it has some potential upside. But if the overall market, the tide is actually going down, that tech sector, tech heavy index might struggle simply because the overall tide is going down, even though there's some potential still upward momentum in the tech space. If we look at the Russell 2000, again, it is really up at resistance, and it has had a little bit of downside pressure here and bouncing up, but it's up at kind of nosebleed territories as well. It's trying to form this giant bottom, or it is forming a giant bear flag that will eventually break down. Again, this could be seen here as we could see all of this as a major stage 3 topping phase, where we have the blow off top, and then it goes into this complacency move, and then it breaks, and we start to see a huge sell-off in the space. So again, we'll just see how things unfold, but we're definitely at a really interesting pivot point. The market could kick into an uptrend and squeeze higher. It could be rolling over and starting something much bigger to the downside. We just have to wait and see. And at this point, we're sitting safely in cash, just earning interest, which is not a bad rate of return considering the risk that's in the markets right now. And we don't really want to get too involved if we don't need to until the market firms up and gives us a new signal. If we take a look over at the chart of bonds continue to work themselves through this kind of falling range. They hit their head on resistance, and the 50-day moving average got rejected there yesterday and moved down. We're starting to see a little bit of movement this morning. It's about 850. So we're having obviously some economic data. So we're getting a little bit of a pop and push. I think that's happening in the indexes as well. Let's just take a look. Not so much, a little bit of a movement. Overall, let's go take a look over at precious metals. We got gold starting to pop and squeeze higher this morning. A little bit of economic data, I think, pushing that a little bit higher. Silver is up about 2%. Again, metal space is really, it hit its 100% measured move just based on this short-term pattern here. We came all the way up, hit that 100% measured move. Now it's consolidating, and now silver is starting to push and move higher. Gold is a little bit more struggling a little bit more and flagging sideways, still within these inside bars. So I'm not fully sold. I don't look at silver as a barometer or gauge because it's super volatile. It's has more volatile traders and investors in it, so you can get false breakouts all the time. But gold is inside bars, inside this big round bar. This could still very easily just turn into another big red bar here any day and go back down to the 50-day and continue to consolidate. But overall, they've hit their move and they're consolidating. I am expecting higher prices still, but it still might take some more time to mature. We'll just have to see. Let's actually take a look at GDX as a little bit of a barometer. What are they doing this morning? Let me clear this chart up. They are set to open a little bit higher, around 34.60, 34.68. So they're set to move higher again. And they've done the same thing. They've hit their 100% measured move, and now they're really just consolidating. They're oscillating through here, digesting this recent move, and potentially building a launch pad to try to run and move higher. If the stock market runs higher, I think we're going to see miners do very well. If the stock market does struggle and actually is starting to go down, I think miners can hold their ground and maybe etch their way a little bit higher. But because they're in the stock market, if the stock market tide is going down, it's naturally going to put downward pressure on them. Even if there's buying pressure, it's going to be muted by the overall panic and selling in the market. Whereas physical gold, commodities not linked into the stock market selling pressure, they could continue to float higher. And I've talked about that several times. I like gold as the most consistent, lower risk potential at this point to hold its ground and move higher versus miners. Naturally, people want to get into miners because they want to make a bunch of money. But the reality is, if the stock market goes down, it's not going to be the better play. Gold will probably outperform dramatically compared to miners. We just have to see if the stock market is going to rally for another leg higher or if the stock market is going to struggle. Taking a look over at crude oil, it's up about 0.75%. It's trying to work itself out. It's had a big three-wave correction. It's down in the support zone. We talked about these highs. We talked about these lows. It's trying to find support. It flushed down yesterday, ended up getting bought back up. So maybe this is a flush and shake out here, and maybe it's going to start to work itself up. Typically, we see gold energies move higher. The XLE has actually been one of the strongest movers. It's got a big bull flag pattern here, a three-wave correction. Before I was talking about this ABC correction, that when you break, you've got an A, B, C. It's this C correction that when it breaks this low, short-term traders panic out. It creates a drop of all the stops getting hit, shakes everybody out, and then the market can take off without everybody. ABC corrections are a cleansing move. I see them as a bullish thing. Prices come down to this blue 50-day moving average. So we'll see. Overall, the chart looks very strong. It is in a short-term downtrend, hence the red bars on the momentum. But longer term, this is a pretty strong chart pattern, and we could see the energy space and precious metal space continue to do pretty well. Coming back just to our cycle analysis, the blue cycle, when the stock market is getting close to a top, precious metals do well, energies do well, industrial capital goods do well, and all those have been leading kind of the way in terms of overall performance for the market. So we are seeing those hold their ground, and that is an early warning sign that the stock market is very close to this top. And I've been talking about this for a long time, but keep in mind these bull and bear market cycles can last 5, 10 plus years. It's not like it's going to just turn around in a quarter or even a year. It can take time for all this stuff to work itself out. A good example, just to show how different markets top out and things at different times. The small cap stocks, the growth stocks like the ARK ETF, Russell 2000, they all kind of topped out around the same time and then have flushed down, and they're creating, it looks like a base, but overall I do believe we'll see another leg down in the markets, and a lot of people think this is an opportunity for another big rally. I believe it'll get cut in half again and get down into the teens potentially, which is people aren't expecting. But the small cap risky stocks, they topped out forever ago. We're talking several years ago already. Now the large caps are starting to finally stall. And when the large caps stall, that's when the overall index really starts to go down and pick up speed. Because the large caps they carry all the weight, and they continue to push this market higher, even though most of the sectors in small cap stocks have been beaten up. It hasn't been pulling the market down. Anyways, that's it for now. We'll talk to you soon. Bye-bye.